Hello.
Morning, Mr. Jeff. Morning, gang.
Good to see
Hey,
everybody.
hey.
Hi, Sean.
Morning.
Hey guys, do me a favor if you can. We're gonna have a lot of people on here. We'll get started here in just a minute, but if you can, turn your cameras on, okay? I really want people to be participating in this. I mean, when your cameras are on, we know you're paying attention. When they're off, we know you're just doing other things and just kind of listening in the background. That's the truth of it.
Call them out, Jeff. Call them out.
Heck yeah, that's what's going on. I know it. They're over there. They're googling things and reading things on Facebook, and that's what they're doing. So, anyway, I know it's a busy time, but this is definitely going to be a good hour to be on and participate. We appreciate you guys. If you're a guest with us, definitely welcome. We do this every Tuesday morning, 11 a.m. Eastern, 8 a.m. Pacific. You're always welcome. Guests are always welcome. We mix up the topics. I have a feeling this topic right here, we might extend this out a couple, 2, 3 weeks. We'll see how this goes. But, it's kind of the theme of the hour here, I think, is the whole market shift that we're all going through. So anyway, a lot of us just got back from Florida, Orlando. We had a big EXP shareholders meeting down there. It was phenomenal. As good as it was, the last night was awesome. We all had run of the park at Universal Studios. They closed the whole place just for us, and I was amazed that all the restaurants were open. And we could order. We could go in and just order whatever you wanted. It was all just paid for. That was pretty cool. But anyway, we had a good time. We rode everything. I rode every single ride that was there. It was just, man, 5-minute wait on everything. It was awesome. So anyway, it was a good time.
We gotta brag and say, including that crazy rocket roller coaster.
Yes, Kathy rode that.
I don't know what that's supposed to mean.
That was the last ride. That was like midnight that night. Yeah, it was fun. We had a good time. But anyway, of course, then I come back. I wasn't feeling good, and I come back and went ahead and stopped at CVS on the way back, and I got COVID. So anyway, so I was down for a few days, man. It's just, I'm definitely feeling better now, about 90%. But just been fighting, just being so darn tired. Had a sore throat that went away after about a day. But, feeling better. Do me a favor, guys. Mute yourselves. Everybody, mute yourself if you can. We'll open it up here for some Q&A, that kind of stuff. We want to get as many people talking here as we can. But Kathy, why don't you introduce yourself real fast, everybody? Just tell briefly, just who you are, what you're doing. Your story, and then we'll jump into things here, okay?
Yep. So Kathy Carter, I'm actually out in Nashville here, been in real estate 24 years. Been at EXP for 5. Prior to that, I was at Keller Williams. I was a managing broker there for several years. And so we're excited to have this topic today. We're kind of in that little bit of a potential shifting market. So we're excited, been in the real estate market for 24 years. So survived the 2008-9 years. So we're excited to have this conversation and some dialogue going on with you guys today.
Yeah, for sure. So a lot of you guys know me, Jeff Morrell. If you're visiting with us, again, if you're a guest, we appreciate you being on here. Hopefully you get some value out of this. I've been a realtor also 20 plus years. My wife and I work together. We've done a lot of stuff. I mean, grateful for the business, as crazy as it can be sometimes. We've been in the top 20 here in town out of about 4,000 agents. Colorado Springs is where I'm at. Been here the whole time with my business. We had the #1 Keller Williams team here for about 5 years when we were there. That was 8 or 9 years ago now. But, moved over to EXP 4 years ago. It's been awesome. Continuing to sell a lot of real estate, whatever. We don't have our team, our traditional team anymore. We're building another kind of team here at EXP, having a lot of fun with that. But let's get into this, okay? Because the market, I think if you scroll down Facebook right now, and I know we're on there all the time, we're all, reading the things, whatever, and it's real easy to get caught up, I think, in the craziness out there. If you start buying into all the headlines, and I think a lot of this would not even exist if the media would ease up a little bit. They tend to, of course, that's the news. They want bad news sells. And so I think we get a lot of that. There's a lot of fear out there. We're seeing a lot of different things out there. I think here's the thing, 2008 hit, and I remember, man, it happened quick. Those of us that are around, it really shifted fast. And that was a whole different scenario than what we're in right now. We're going to talk a little bit about that. But I think, we don't need to come into this time right now in a place of fear. That just won't work. People will follow strength. They won't follow weakness. And I think you need to come into this educating yourself. I think you need to be on top of things, but I think there's a way to really come out ahead in this market. There will be a lot. The biggest years I had in my entire 20-year career, if I look back on it, 2009, 10, and 11, those years right there were huge for us and our team. Our biggest year ever was 2011. Now, we had to shift big time. We were doing short sales back then, and I'd never done a short sale probably prior to that, and that's all I did for 3 years. It was a pain, but that's how we got through it. And man, we did hundreds of them over those 3 years, and we gained a lot of market share. There will be a lot of realtors that will come out of this market, shining big time, and build a name for themselves, and build a brand for themselves. And that is very doable in what we're going to go through over these next few months, next year. I don't know how long this is going to last, whatever, but it's a completely different market than what we were in before. That is for sure. So to start with, I want to share, go ahead.
One thing I was just going to add to that, I feel like, as realtors, really our number one job during this, little bit of a shift is just to educate your clients and to calm their fears, right? They're looking to us as the experts for guidance, and it's up to us to be able to calm their fears. And so I feel like that's critically important as we start going through this, whatever it is that we're going to go through. Like Jeff and I, he's going to share some slides here in a second, but we don't believe, listening to different experts that we're going to be anything like 2008. And we're going to talk a little bit about that, but just know that it's just up to us to, calm people.
For sure.
This.
Be a lighthouse.
Be a lighthouse.
I may add, first of all, thank you guys, everybody, for coming. But if some of you are on here and haven't heard some of the past trainings, you were talking, Jeff, about short sales. If you're new to this, or maybe just, again, have missed some of the past, we did one a couple months back on short sales. So feel free to put over in the chat box. If you're someone who is a guest, we can send you the video. If you're within EXP on the Freedom Team, it's within our Freedom Team on Workplace. You can scroll down. I don't remember what month that was, Jeff, for them to go find it, but you can scroll down, and I think it said something about short sales, didn't it?
Yeah.
On the top.
Jim and Stacy Lambright did that training. It was phenomenal. Good mastermind there. Michael Higdon did one a month ago, 2 months ago, whatever, on probates and estates, just another thing that does not go away in this market. There's lots of ways to stay ahead. Here's the thing I would tell you too. I think, make sure you're around good people. I think that's the one thing too. I got to say, just, we've all got each other. And if you're a guest here, seriously, feel free to, use us, use the people, use the person that brought you on here. Like, you're not in this thing on your own. You can isolate yourself and feel like you're on an island, and then that fear can really set in. A couple of weeks ago, was it 2 weeks ago, when the stock market tanked? It was a Monday. Crypto tanked. All the interest rate shot up like 3/4 of a point in one day. It was the sky is falling kind of thing, and we all felt that. I felt that there was a little bit of that. Holy cow! Like, what is going on, and where's this headed? But I will tell you, I called a few people in here. And just to be able to call a few people in here and to talk that through a little bit, it's like there's strength in that, And so make sure you got some people around you that you can, lean on, and that you can dig in with and talk to, and we can help each other, because, we'll get through this here in a big way. So let me share my screen, guys. I want to just go through a couple things, and just to kind of set us up here, okay? I'm going to turn my camera off here for just a minute, because I got a bunch of notes here, and I don't want to distract you guys as I'm kind of looking through some of this stuff. But I think the first part of this year, if you look at really the first half of 2022 here, it's all about the interest rates. That's been the story in this business up to this point. There's definitely been a quick and pretty dramatic rise in the interest rates. But, if I were to bring some perspective in this, and no doubt some of you guys have probably seen something like this, yesterday, the rate, the national average across the country, the 30-year fixed was 5.83%. Okay. Higher than we've been for the last decade, for sure, but below where we've been in previous decades before this, going all the way back to the 70s. And I think it's important because, sometimes in our business, here's the thing, I think we have to be really good listeners. Okay. Here's the thing, there's a lot of people that have gotten in the business here just, recently in the last couple of years. They don't know any different. A lot of you guys, you don't know any different. There are people coming into this market. They don't know any different, than all they've heard for the last several years, the rates and the 2s and the 3s and whatever. But I do think it's important to have some perspective. Don't go at these people, hey, back, well, you should be grateful, man. 20 years ago, the rates were, 19, 20%, that kind of stuff. Like, that's not the way to approach clients, right? We need to be good listeners. We need to listen to them. But I think also it's important to bring them into perspective. There are a lot of people out there right now paying 18, 19, 20% on credit cards, and they don't think twice about it. There's people paying 9% on car loans, and they don't think twice about it. Okay. Now, this is a much bigger purchase, and I definitely want to acknowledge that. But again, perspective, I think it's important to hang on to that. There's definitely been a shock, the first, few months of this year. I get it. Okay. But again, perspective. The average, yesterday across the board, 5.83%. Now, the 30-year fixed mortgage, this is something I think, again, some of you guys know this, but some of you may be new to the business the last couple of years, maybe have no idea about this. The 30-year fixed mortgage, it follows the 10-year treasury. Okay, so here's the thing. I want you guys, these are just things you can start looking up and start educating yourself. The more you understand some of this stuff, the more you can have the right perspective, but also the more you can educate your clients and your prospects. Okay. Let's look at this real quick. Okay. Why the 10-year US Treasury yield matters. These rates indicate the confidence of investors in the economy. Let's read this for a second. Treasury bond yields or rates are tracked by investors for many reasons. The yields are paid by the US government as interest for borrowing money via selling the bond. But what does this mean, and how do you find yield information? Treasury bills are loans to the federal government that mature at terms ranging from a few days to 52 weeks. A Treasury note matures in 2 to 10 years, while a Treasury bond matures in 20 or 30 years. The 10-year Treasury yield is closely watched as an indicator of broader investor confidence. Because Treasury bills, notes, and bonds carry the full backing of the U.S. government, they are viewed as one of the safest investments. What does the 10-year Treasury yield mean? The 10-year Treasury yield is the yield that the government pays investors that purchase the specific security. Purchase of the 10-year note is essentially a loan made to the U.S. government. The yield is considered a marker for investor confidence in the markets, shining a light on whether investors feel they can make a higher return than the yield offered on a 10-year note by investing in stocks, ETFs, and other riskier securities. What factors affect the 10-year Treasury yield? Some factors that affect the 10-year Treasury yield are inflation, interest rate risk, and investor confidence in both the Treasury security and the overall economy. The bottom line, the 10-year Treasury yield is used to determine investor confidence in the markets. It moves to the inverse of the price of the 10-year Treasury note and is considered one of the safest, if lowest returning investments that can be made. Although the investment is guaranteed by the U.S. government, investors could still lose money if inflation outpaces the 10-year yield. Now, I don't want to get all hung up on this, but I'm just saying there's things that you can start looking up and digging into this just to understand this a little bit better. Because here's the thing. For 50 years, the 30-year mortgage rate has moved directly in line with the 10-year Treasury yield. Okay? You can follow this and you can start tracking this. The average spread over the 50 years, you can see right here, is a 1.7 spread. Okay? Now, in the first part of this year, there's definitely been a rise. There's been a rise in the 10-year Treasury yield. Yesterday, there's a 2.2 difference, okay? Or at the beginning of this month. Yesterday, it actually shot up a little bit. It was about 2.83, okay? But
So,
this is
Jeff,
go ahead.
One thing I'll throw into that is understanding this, and the rates are like you just showed, the last 50 years are following the 10-year Treasury. When we hear that the Fed is meeting and they're raising interest rates, that's not the home interest rates. A lot of people are like, oh my gosh, interest rates are going to go up. And that's not necessarily the truth. Now that's going to affect your credit card loans, those, your home equity loan, those interest rates. But when we hear that the Fed's meeting and the Feds are raising the rates, it's not the home interest rates. So as the experts, what he's showing is we need to really pay more attention to what the 10-year Treasury is doing,
Exactly.
Just to be educated.
Yep, exactly. Okay. Things that you can watch. So one question we're getting asked a lot, are we in a correction? Are we in a housing market correction? I'm going to answer that for you. But whether it's, whether it's rising interest rates, here's the concern, or, existing home sales are down, or are we in a market correction, or has the real estate market peaked? All these headlines that people start to read that then they become concerned with those. We always say the headlines do more to terrify in a lot of these scenarios than they do to clarify what's actually happening in the real estate market. So are we in a housing market correction? The quick answer to that, this right here, a correction is a decline of 10% or greater in the price of a security, asset, or financial market. Okay? Here's the technical definition of it. So if you go with the definition of a correction, we're not in a housing market correction. And you can say that with confidence. So, why is that? Experts, are forecasting almost a 9% appreciation in residential real estate this year, across the board, the average. If you think about that, historically, we've seen about 3.8% appreciation, in homes in this country, going all the way back, years and years and years. 2020 and 2021 were complete anomalies in this market, but we're still, phenomenally healthy, the appreciation rate. If you look at this is what the forecast is, for 2022. So, are we in a correction? We're not. Okay. So it's not a correction. Here's the word I'd be using more. The phrase I'd be using, as we talk about the market right now, it comes from Danielle Hale from Realtor.com. The housing market is at a turning point. We're at a turning point. We're starting to see signs of a new direction, but the ball is still in the seller's courts in most housing markets. Now I'm going to give you some information in just a minute that shows, where we're heading and where clear signs are. But let's remember this, we're at a turning point right now. Coming out of two, again, anomaly years in the real estate business, no doubt about that. But the ball is still in the seller's courts. We're still in a seller's market in most areas. Everybody that I'm talking to, there's still in just about every market, people I talk to, there's just more buyers than there are available homes for sale. So what's ahead? Nobody's got a crystal ball here. We're really seeing things, head back to kind of a pre-pandemic level in a lot of ways. This quote here, Mike Frattoni, chief economist of the Mortgage Bankers Association, he says mortgage rates are likely to plateau near current levels. I'm going to pause there. So what Mike Frattoni is saying is mortgage rates are likely to plateau. We can already see the plateau a little bit. We're, again, the high fives right now, we're kind of hanging there, came down a couple times. It's kind of floating around right there. I can tell you, we're coming into a peak, I believe. It definitely seems to be plateauing. What's the peak going to be? I don't know yet, but we're not going to get super, super high. I really don't think that. His perspective is they're likely to plateau, roughly where we are right now. The financial markets have attempted to price in the impact of the Fed's action over the cycle and are likely to also price in the economic slowdown that will result. Once we are past this rate spike and associated volatility, the Mortgage Bankers Association expects that potential home buyers may be more willing to re-enter the market. So home buyers, they may, in a rising environment, go, whoa. We've talked about how it has the ability to take people off the fence. So some will go one way and say, we're not going to do it. Some are going to go, well, we're going to get in before it goes any higher. But as rates plateau, this volatility subsides. They're saying they expect more potential home buyers to be willing to enter the market. So take a look at this, all these different, Freddie Mac, Fannie Mae, all these different, here's the home sales forecast coming out by these different groups, and if you look at this, right now, 6.9 million down to 6.1 million. To put that in perspective, guys, in 2021, 6.9 million homes sold in the US. Okay. Most would say in the interest rate environment we're in, we're likely to see that impact on the market to the tune of about 10%. So as interest rates rise, we're likely to see, about 10% less in home sales. So if you take that 6.9, it's about, 700,000 homes less that we would sell this year. So those forecasts, 6.1 to 6.9, I think all we have to do with what happens with interest rates, what happens with consumer demand, what happens with the economic uncertainty that's in this country, whatever. It gives you a perspective, though, on total home sales this year, really forecasted to be a very good year. And think about that, guys, 6.1, even if it's 6.1 million homes sold, a little bit less than that than last year, That's 12 million commission checks that are going to be issued this year. Think about that. Okay, there's a lot of money still to be made in this business. Okay, so next thing, point about what's ahead here. Experts don't believe the market is in a bubble or a crash is in the cards, like during the Great Recession. The nation is still suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider home ownership. That's likely to keep prices high. We're not in a bubble. A crash is not coming. But what's important here that I would pay attention to is this quote, that the millennials are reaching the age where they start to consider home ownership. So millennials are working through the peak home buying years. We know they're the second largest generation behind the baby boomers, just behind them, really just a little bit. But as they move through, they're driving demand. We know we don't have the number of homes on the market for the number of people that want to buy them. And that's not going away tomorrow or anytime soon. That lack of supply keeps upward pressure on prices across the country. So those that are wondering, are we in a correction? Are homes going to lose value? You can bring the expert perspective to them. We can also bring the real world perspective of what's happening with millennials and the demand they're bringing to real estate. One thing that's at a real fever pitch right now, are we heading into a recession in this country? With the Fed's action, raising the Fed funds rates, which remember, Kathy said it, that's not the 30-year fixed mortgage rate. That's intended to slow the economy. If that's not done precisely, then yes, that puts us potentially into recession. Yeah. And we're kind of watching that going forward. Do you want to add anything to that right there, Kathy, at all? Any thoughts right here?
No, no, I think you covered that well.
Okay. So if we think about this, though, I think it's one that we need to engage on. We need to talk about as we meet with people and certainly talk about their concerns. So just a couple things on recession. Recession is defined by the National Bureau of Economic Research. The technical definition is a significant decline in economic activity spreading across the economy, lasting more than a few months. And they go on to say that there's also kind of an industry definition that we have of 2 consecutive quarters of negative GDP, but defined by the National Bureau of Economic Research, and that's their definition of a recession. As you get into the technical elements of it, not suggesting that we need to become experts on the technical elements of defining a recession, but I think every time, somebody who's a homeowner hears of a recession, they hear of a housing crash. And they hear the housing crisis because of what happened back in 2008. But let's go all the way back to the early 80s. There's been 6 recessions in this country. And what happened here? You can see it, in this graph. 4 out of the 6 times home prices have actually appreciated. 2 times they depreciated, early 90s, less than 2%. That's really a marginal depreciation. But what everybody remembers is 2008, when homes lost almost 20% value. A lot of people were hurt then, a lot of family members, people having to come out of retirement. I mean, that was a crazy time. That was a horrible time for so many people, and I get it. But when they hear recession, here's where consumers go. They think that, okay? But again, you can arm yourself with this kind of stuff. Like really 4 out of the last 6 recessions, prices have actually gone up, okay?
Well, and here, well, I was just going to say historically, you see this graph here, which I love. And even if our house prices drop 20%, which I don't think anybody's predicting or expecting, but we have inflated the houses so much over the last couple of years that even if we had a 20% drop, we're still going to have a lot of equity. Most people are still going to have a lot of equity in their home. And so talking about the short sales that we kind of brought up at the beginning a little bit, I don't expect that we're going to be back in any kind of short sale situation because of the equity growth that everyone has experienced these last couple of years.
Yeah, I would agree with that for sure. There's a lot of room there for people to sell. So, right here, Shivani Peterson, okay, mortgage expert. I like this quote. Again, these are things that you can keep and just, hang on to. We'll have this posted later, whatever. So, things that you could just, hang on to, put in your presentations, that kind of stuff. If you're looking to buy a home, I would still recommend you do so even at higher interest rates, because we have no reason to believe that home prices will stop appreciating. Home values going up is only a problem if you're trying to buy. When you own, it's a gift, and that's a great perspective. When you own a home and prices are rising, that means equity. There's such a huge difference between a renter and a homeowner when it comes to their net worth. So right here, think about this. Everyone gets an orange line, okay? What doesn't go down in a high inflationary environment? Rent.
Yeah.
It doesn't. Rent, higher interest rates, they can always be, refinanced into lower rates. I've seen this around Facebook lately, marry the home, date the rate.
Yeah.
Once you're in a home, that's your home, you're married to it. But that interest rate, when rates drop, you can refinance, okay? Date the rate, okay? But with renting right now, if the idea is, well, I'm just going to hang tight and rent and wait until prices come down or wait till rates come down or whatever. Here's the deal. Your payments are going to continue to go up, up, up. But the equity, that just stays flat. You have no equity whatsoever. That's at zero, okay? But if you own, what's happening over this time? Your equity continues to go up, 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 but your payments stay flat. They never go up, okay? So everybody gets an orange line, pick your line, okay?
Well, and if you think about it, when you're renting or somebody is renting, when you're having this conversation, when you're renting a home, you're paying 100% interest at the end of the day, right? I mean, nothing, you're gaining, like he's showing here, zero. So it's almost like you're paying 100% interest when you're renting. And I think you said this, Jeff, like most Americans' net worth is in their equity of their home. And so owning a home, there's so much more value, as you're having conversations with your buyers who are, scared right now to make a decision or to make a choice. Again, if you start talking to them about, their net worth, I mean, the houses historically, you saw how they've appreciated, that's where most people's net worth, right, wrong, or indifferent, is in American wealth. And so, I think that's a huge, a huge conversation to have. Also on the flip side, where I feel like some of these conversations are having to come into play with the market, having a bit of a shift, is when you're dealing with your sellers, right? It's two different, in my opinion, it's two different conversations with your buyers and your sellers. Because sellers, they're so used to the market doing what it's been doing, and they don't want to be the first ones to adjust their pricing. They don't want to be the first ones to, because they're still seeing what their neighbor sold their house for 6 or 8 weeks ago. And so that's where we come in as the expert, educating ourselves, like in here, like we're talking about here, and then turn around trying to educate the sellers. And there's a lot of different conversations, and we'll kind of mastermind some of this as we go, through the next 30 minutes with some people on here. But there's some different ways now. I think what we talk about is, how do we have those conversations with sellers, right? How do we have those conversations with our buyers? And so why don't we just kind of mastermind a little bit around some of that? And, we've got some really, really great top agents that's on here. And maybe why don't we reach out to a couple of them and let's see kind of what you're doing. I've got some thoughts and, some things that I'll throw out. But Andrew Earmonger, are you here still? I saw you. Andrew, there he is. Andrew and his team, they're selling over 200 homes this year. He's been in the business, for a long time. So Andrew, what are you teaching your team, and what are you talking about with your team in educating, them with, with some of this market shift?
Yeah, the big thing that we're pushing right now is just getting the information out there of what's actually happening. I'm seeing a lot of like headline stuff that's just utter garbage. I just read one the other day that said medium home prices decrease 50%. And then you opened it up and it was like, well, what we mean is like, it's going like this, and then we're decreasing 50% of that. And it's called deceleration, not pricing adjustment of 50%. So they're using language.
It's not moving up as fast.
Right. Yeah. It's deceleration at its finest, right? We're going to go back to a standard 3 to 5% market share for those of you guys that are using or watching the market and watching what's going to happen. So the big thing that we're trying to do is push out that information and letting everybody know,
And how are you pushing that out? Are you talking about to your team, or how are you pushing that out to y'all's clients and what have you?
So we're trying to do a lot of video. We've got a pretty big video push right now. So, through all the channels, Instagram Reels, we just started a TikTok. That's been interesting. So that's kind of some of the big avenues that we're doing. And then whenever we're talking to our clients, like our ISA staff and stuff, are making sure that they're mentioning this stuff, because we are getting people that are like, hey, I don't really know if this is a good time. And it's like, okay, cool. Well, let's sit down and chat about whether it is a good time, because at the end of the day, like Jeff was saying earlier, we need to find out why. Like, we can throw out all this information in the world, but it might not be right for them. So we need to make sure that we're asking the right questions so that our clients can make the best decision. We're in sales. That's our job. And somewhere along the line, I think a lot of us forgot that, because the market's been so good. You just throw something on the market and it sells.
Yeah.
But I think we need to be talking to our customers and figuring out what is best for them.
Well, and I love what you just talked about the video. We've done other talks and classes on that, but if you're not using video in your marketing, it's probably the best way to really get yourself out there, get yourself known. That's a separate topic, but I love that you're doing video educating, your marketplace and the people that you're connected with on social media, and having your team do that as well. Michael Higdon.
Let me hit. Can I hit real quick,
Oh.
Kathy? Can I just, because I think a couple of things on that. I do think, video, again, we've talked about that before. I want to emphasize that here. You could start putting together little 2 and 3,
Snippets.
4-minute videos.
Yeah.
Everything that I just showed you there in those first, 15 minutes or so, you could take little bits and pieces of that, or look up some of your own information, put together a little 2-3 minute video and send it out to your database.
Yeah.
You could text it out to your prospects. You could text out to past clients, let them know what's going on. There's so many ways you could get that message out. Get a video up on a YouTube channel. Start creating that. Okay. Become the expert in this market. I'm just telling you, it's a whole different perspective than what the public is hearing, because they're hearing like that headline that Andrew read, 50% drop. It's like there's just so much misinformation out there, and we all just buy into it. Okay. Your clients are buying into it. There's a lot of realtors buying into it, but get the truth of what this is. And again, become that expert, be that lighthouse to your people. Okay. The other thing I want to mention, Andrew, is, you mentioned, like, have those conversations with some of your clients, but, be ready to pivot a little bit. I think to think about, like, like they've pulled back out of the market because, whatever, they're concerned about whatever it is. Listen to that, empathize with that. Okay. But I think also, to ask, maybe switch that around. What can I ask you? What had you looking for a house in the first place? Man, just, we had another baby this last year, man. We are just busted at the seams right now. Like, we really need more square footage, or, whatever. We just, we've been looking for so long. We want to get closer to where we work. We're driving this 30-minute commute. The gas right now, it's killing us. I mean, you can start having those kind of conversations. And I think with that, you'll uncover some different things in that conversation. You might throw it out there like, hey, just educate them with some of these things that we just talked about. They're waiting on prices to drop. Well, let me just show you some of these things. Really, the forecast, there's no forecast out there right now that's showing the prices are going to drop. They're not going up as fast, but they're really not expected to drop. And let me just show you some of this data. If we had you on a search and a home came up, an opportunity came up, would you be open to possibly, maybe getting back into the market, or be open to looking to see that? And they might, no, okay, that's fine. Don't push on that. But you might open up, actually, you're right. I probably would be open to it. You can all of a sudden, you can pivot and start educating them, and now they're back in the market, and you're actually doing them a favor. Because they're probably going to be able to get that home for, they might get that home for $500,000, where it's going to be $600,000, 2 years from now. I don't know. It's still going to continue to go up. That's the forecast. So again, I think have those conversations with people. But Andrew, thank you very much. I appreciate, all that you're doing, for sure.
Yeah.
Some good stuff. Go ahead, Kathy.
I was just going to ask Michael Higdon, what are you kind of educating your people on? And, what are you focusing on during this time here?
It's still selling real estate's always been a contact sport for me. So continue to make your contacts in the morning, because, the more people you're going to talk to, the more conversations you're going to have, whether that's an education standpoint from a an expired listing, a canceled listing for sale by owners. They're still selling themselves. They're not going at as fast a pace as they were, meaning they're not getting 20 offers. Maybe they're getting 2 offers right now. And the price reduction script is coming back in play, even though we're appreciating some people's need to get back to reality. What we've seen over the last 3-4 years is not a normal market. In fact, it's anything but. And people I think are so trained to that. Say, look, what's normal is not getting 20 to 30 offers on a property, not having it sell in one day. Maybe it does take a week. Maybe it does take 2. So when I recently had a conversation with one of my sellers that they wanted, the comps that I showed them was like 265 to 275. And they had a renter in there. I said, well, if you get them out, you change the carpet out and you do some fix up, we can stretch it to 299. And they were like, yeah, that's great. They did that. And then I said, okay, we ready to list it? They're like, yeah, let's do 325. Well, that wasn't the conversation that we had. I said, we can try, you can do whatever you want to. I said, but just be prepared that the market may not reflect that. And I always remind them, I said, there's 2 controlling variables and there's 2 non-controlling variables when it comes to selling real estate. The first one is location. We can't control that unless we put the house on a truck and move it somewhere else. The second thing is competition. Very much you want to be aware of what your competition is doing as they come on the market, but we can't control, who is selling in your neighborhood, but we want to keep that as a barometer. The third thing we look at that's a controlling variable is going to be the condition of the house. Does it smell like cat? Does it have purple carpet in there? We can control that and we can change that out based upon the feedback we're getting. And then the fourth one we're looking at is the price. And that's always been the number one controlling variable. And then they're looking at, well, do you think it's overpriced? I said, are you going to change the condition of the property any more than you already have? They're like, no, we've already painted it and done carpet and all this stuff. I said, I agree. It looks fantastic. So what do you think, Mr. Seller, we should do to cause it to sell? I'm like, well, we should probably go down to the 299 that you originally, recommended. I agree. So if you continue to have that common sense conversation, again, we haven't had to have that conversation a lot in the last few years. So I'm telling agents, and I'm in a lot of other mastermind groups, you need to start working on these other scripts, because you're going to have more expireds, you're going to have more canceled listings coming on the market. You're going to have to know your price reduction scripts a lot better, because even though we are going up on price still, there may be a plateau, and it's just being prepared for that.
So let's kind of mastermind that a little bit. So because this is where I feel like it's with the sellers that we're going to have some of these maybe harder conversations because of the last couple of years. And so let's mastermind that a little bit here. There's multiple ways. Yes, we can do price reductions if need be, but what about, having discussions about buy down rates? Right. What if the seller contributed some closing costs to be able to buy down a buyer's rate? There's different ways that if a buyer, just say if a buyer came in and they're going to, or a seller, we'll just go the seller's route since we're talking about that. If they reduce their house by $10,000, right? Or what if that's $10,000? Or what if they offered $10,000 towards closing costs to buy down the rate for a buyer, right? I mean, for a buyer, reducing it $10,000 makes their payment about $60, $70 different. To be able to buy a rate down 0.5% in today's marketplace is probably going to make, $150 difference from a buyer. And buyers are payment sensitive. They're not so much price sensitive, they're payment sensitive. And so have any of y'all started having any conversations with your lenders and sellers or buyers about rate buy downs?
Nobody?
Well, I've been talking to a lender friend that I use, and that's what we were just discussing this morning. Some of the houses that are overpriced, as we look at it now, they're starting to put in their offer that the seller contributes to a rate buy down.
Anybody else?
I've had that conversation with one of my listings that's just been basically sitting for the last 2 weeks. We've had a handful of showings. A few folks showed up to the open house, and it's just a situation where sellers, I feel like, are the last ones to admit that they were late joining the party.
Yeah.
I told them at the start that we were high, and we had a comp that closed on their street for 15 less than what our list price is. And it's a couple, and he wants to listen to what I'm telling, this is what we need to do, because it's a contingent deal. We're supposed to close on their new house next week, and we aren't even under contract. So he wants to listen. She's just adamant that they are not going to lower the price. They're not going to offer concessions that we could offer. That's the way I described it to them was, yes, that's a little bit off of your profit margin, but it's another great way to have a touch point out there with buyers and with buyer agents, of be able to send it out there, not saying, hey, we're lowering the price, but hey, we're willing to work with your buyers. We know they're scared. This is a way to, get them a better rate, in this kind of fluctuating market. And so that's how I kind of discussed it with them, of it's just another way of having a touch point. And they saw it. She's just adamant about, I think it's worth this. And it's clearly the market right now doesn't think it's worth that. So,
and that's the conversation I had with my seller right the very first time, whether we're in this crazy market or that we were in or now. I always tell my sellers on the front end, I'm like, the market is really what's going to dictate the value of your home. It's not me. It's not you. I had this conversation with them at the listing appointment, and I will tell them, I'm going to be the messenger. I've been in real estate 24 years. I will be the messenger, and I will guide you based on the feedback, based on the reaction of the market, based on how many showings we're having, all of this data. And I will give you my best professional opinion and advice on what we should do right from the beginning, and if we have to pivot and change price. But at the end of the day, it's the buyer that decides decides the value of the house. And I think, having those real conversations on the front end and educating, that's the word we keep using today, is educating our clients on that. We can all think a house is worth X dollars, but if the buyers don't think that, it doesn't matter. At the end of the day, it just doesn't matter. And so we just got to be the experts in trying to help, maneuver the expectations. And just like, Caleb, with your people, they're buying a house next week that's contingent on the sale of theirs, and the wife is being stubborn. So then that conversation goes to the wife. Well, what's more important to you, getting this house that you're likely going to miss out on, that you guys are wanting to buy, or just sitting tight and trying to get maximum dollar? And the longer we sit on the market, the less the value is probably going to be, because once it starts looking shop worn, then buyers are going to think a seller is motivated, which at that point they usually are more motivated. And so it's having those conversations and asking those questions of our clients when we run into, stubborn clients, as I would say. It's like, why are they even making a move to begin with? And reminding them about what they're trying to accomplish.
Definitely. The days of walking into a house where the seller says, my neighbor closed last week at 600,000. Let's list ours at 650. Guys, those days are gone. Those days are done. Okay. And you have to be ready to educate the sellers on why. In the first meeting. We got you want to set yourself, and again, listen to them.
Yeah.
We haven't had to have conversations with people for the last couple, 2-3 years. I mean, it's just, we haven't. You've got to learn to connect. You've got to, and again, the empathy has to be there. They need to know that you're for real, that you're there to help, you're there to help guide them through this and get them through this, and be a good listener. And I think, when you can show them the numbers, you just don't shoot the messenger. My wife and I, we had a listing we put on about a month ago, and I'll just say they wanted to price the house at $499. Okay. And we were like, and we showed them the comps, we showed them what was going on, and we showed them how many homes had to have price reductions over the last week. And here in town, I mean, those numbers are skyrocketing right now, price reductions. It's like we're seeing it everywhere. And we just showed them all the numbers. And we said, just, listen to us on this. I promise you, I think we can get through this. We listed it at $469. They wanted $499. We listed it at $469. We ended up having 11 offers, and we got it under contract at $515. They're doing backflips, singing our praises. If we'd have listed that house at $499, we'd still be on the market, and we'd be down to $469 right now. And buyers are looking at that. Well, it's been on the market for 30 days. There's got to be something wrong with that house. Yeah. And they're not interested. It's old news now. So price it right at the beginning if you can, but you've got to educate the sellers on where we are right now. This market is not what it was 3 months ago. Yeah. Definitely not what it was,
or even 2 months ago. Honestly.
Yeah, I mean, I'm just 3 weeks ago. I mean, I'm just like, it's changing, it's evolving. I think we're going to settle out here over the next, 30 to 60 days. I think we're going to kind of really know what's going on with things. I think we're going to see a lot here in the next month or so. This isn't, things are going to even out here a little bit. I really believe that. Okay. But again, we have to be educated on all this stuff to be able to go in and have those conversations. And we haven't had to have conversations for the last few years. Okay.
Wow, let's put it on itself. Brittany Zappitz.
I think she had to go.
Did she leave?
I think so. Yeah. Can I call in somebody real quick, and not to put you on the spot, Diana Doyle. You just, if you could unmute yourself. You've been in this business a long, long time. Tell your story real fast. You've been how long you been in real estate here? You're muted.
I generally check with both verbal offers.
All right, I'm here.
There you go. So Diana, she's in Colorado Springs. You've been in real estate how long now, Diana?
17 years.
17 years. So you went through the whole 2008, all kinds of stuff. You've been a big agent for a long, long time here. So appreciate you being on here. What are you seeing right now? What kind of adjustments are you making? What are you having? What kind of conversations are you having?
With sellers,
buyers, different people you're working with.
I just had a conversation this morning with someone that I did the same thing you did. I told them to start at a price. They wouldn't agree. They wanted to go to their higher price. Now we're sitting on the market for a month plus, and we're doing these price reductions, and she still doesn't want to let it go. And I'm just having to re-coach people that exactly what Kathy said, the market is going to dictate this price, and your situation or your emotions about this don't dictate price. And I also told her, I remember something that happened in 2008 is we were chasing the market. And I said, that seemed to resonate. You don't want to chase this market. You don't want to keep doing a price reduction after you realized you should have done it last week. So that seemed to resonate as, someone that doesn't want to be behind the 8 ball. None of us do. So that was a good conversation I had this morning.
Good. Very cool. Steveruthers, could you unmute yourself for a minute? Thanks, Diana. Steve's also here in Colorado Springs, been in the business for a long, long time. He was a broker owner for a while, been over here at EXP now for the last several years. What do you see with all this stuff? What kind of, where do you see things going? What kind of conversations would you be having?
Well, I thought you and your presentation, Jeff and Kathy, really nailed it. The slides. I see realtors posting, some of the bigger name realtors here in town are putting stuff on Facebook that, we're in a big shift. We are in a shift, but I don't even like, if we're in a shift, it's barely. I like the way you said it. We're not in a correction or a shift. It is shifting somewhat, but it's still a seller's market. Like you said, I've been around 22 years now. I went through 2008. And I had been doing short sales before. And so I really grew my business during that decline. I also got out of it for a while because I could not do another short sale. So I kept my license. I never did let my license go, but I got into investing and actually even sold life insurance for a year. You got to be able to do what you got to do to survive. And I just could not do short sales anymore. But I love this market. I think it's a more mature market. It's been a crazy, crazy time. And I think there's a lot of agents that got in the business. There's been a lot of realtors come in to get their license in the last two years or so. And they're not very well equipped for, even though I don't think we're in a really what I'd call a definitely not a correction, but they're not very well equipped.
Yeah.
But I think this is getting to be a more mature market. It's what I like to call it.
Right. It's a time, I think, again, the realtors that are going to come out of this on top, gaining market share, whatever, your skills are going to grow up, your education is going to go up, your level, you're going to become a pro in this market. You can be, there will be, I saw the numbers here, 160,000 new agents in the last 2 years. 30,000 did not renew their license in the first quarter of this year. That number is going to continue throughout the year, but it doesn't have to be you. It doesn't have to, it's just, again, I remember 2008, we went from 4,000 realtors here in Colorado Springs to 2,800 in about 8 months. There were a lot of people that had to get out of the business, and honestly, not to be harsh, but there are some people that should get out of the business. It just, they didn't get into it for the right reasons, and they don't want to treat it like a business. And, they tend to give a lot of the rest of us even just, a bad rap, I think sometimes. The ones that want to be pros and we're here to do a service, and man, we bust ourselves and we work hard and we help these people get through these big situations and challenges. And, there will always be homes to sell. There will always be, relocations with jobs. There will always be relocations with military here in Colorado Springs. There will always be, deaths in the family. There will always be, divorces, unfortunately, things that go on. There will always be a need for homes to be moving. Okay. But we have to hone our skills, and this is a time to do that.
Well, let's call on David Doran there.
If he's available, I don't know. He's got his camera off. He might be.
He was typing in there.
David, if you can turn on your camera and talk to us for a minute. While we're waiting on him, let me see. I want to call him Matt Wainer. Not to put you on the spot, but Matt and I've gotten to know each other here a little bit in the last few weeks. Matt's back in Indianapolis, and unmute yourself, Matt. I just want to ask you a couple things real quick.
Yeah, go for it.
How long you been in the business?
Literally almost 18 months to the day.
Okay, 18 months, newer agent, and how you had a great first year. How many deals did you do your first year?
35. 35
in your first year. That's awesome.
Nice.
I mean, seriously, and just, it's phenomenal what you're doing. He's back in Indianapolis. What just as a newer agent, like, what are you feeling right now? Like, what are you seeing? Or does this concern you at all? Have there been fears in there at all?
For my personal business, it doesn't change a lot just because I work with a lot of investors, but from a retail consumer standpoint, I think a lot of people are spooked. I do work with quite a few flippers, so I obviously have to work with buyers agents on that side. And we've definitely seen a major slowdown in the number of showings. So, property is still moving, but days on market is higher, numbers of offers is lower, and showings are lower as well. So,
okay. When you say days on market are higher, what's the average days for you, like back there right now? What do you think, roughly?
They just released the market data. It's a little over 30 now.
Okay.
That's for like the central Indiana counties, though. Like, I'm in the specific MLS where it's just like it's 13 counties in central Indiana.
Okay, gotcha. Here's one thing I would say, and those of us have been around a while. I mean, like, I remember, for years. I mean, the average days on the market, what I was always used to, Diana, you might remember that. I mean, I don't know, 30, 40, 50 days. I mean, this is just kind of the norm for years. What we've been through the last few years, 5 days on the market, 3 days on the market, 2 days on the market. Like, that's just so not the norm. We're kind of going back
189.
What's
Holy
that?
cow. Andrew said 189 when he first started.
Oh my goodness. Yeah. That's crazy. But I mean, we're kind of going back. We're coming back to what I think is more of
Normal.
a normal market a little bit, you know? And so again, I think I appreciate you sharing that, Matt. I mean, I think, you know, again, you're strong, you're good, you're going to get through this. Are you hearing some things on here that are helpful for you?
Yeah, absolutely, for sure. Especially because, I still do work with some buyers, and that's one of the objections or just questions I've been getting in general is like, them worrying about how the Fed is raising rates and having to explain to them that, just because the Fed is raising rates doesn't mean that mortgage rates are going to be affected. And then just, having the expert data as well, like people like who are the bigger names and the bigger players in real estate sharing the accurate information and from a higher expert standpoint, rather than just hot takes and headlines.
For sure. For sure. Good stuff. I appreciate you jumping on here. David, thank you. Thank you so much, man. David, I know you're busy. We might have caught you doing something busy. I know you're probably multitasking. I know how it is, man. So real quick, appreciate you jumping on. Tell everybody your story real fast. You've been in the business how long, David?
A little over 2 years.
Okay. A little over, that's all?
Yes.
Dude, you're okay. And man, you're
He's
doing some big
crushing it
stuff.
too.
Yeah. But what kind of production do you do? Volume, that kind of stuff.
We'll hit about 20 million for me this year.
Okay. Good stuff. What are you seeing right now? How are you adjusting? What are you teaching your people, and what kind of talks are you having with your clients and prospects?
And David's in Kentucky for
Yeah. We're where the Corvettes are made.
yeah.
But no, we're doing good. It's a lot more about education now. It's a lot more about relationships. And it's having some of those hard conversations. I had one the other day that, we just explained to them, what it was and, what the house is worth. And, we didn't get the listing on it, but we were truthful and we gave them the right information. We gave them what the property was worth and what it's going to be in. And that's all you can do is just give them the right information. And, I emphasize constantly to my team to be a fiduciary and to take that client's needs and to truly help them. And if you truly help them, the sort of rest will come, I guess. I learned a lot from this seminar today on different ways to position things of telling them the same information that I've been telling them, but I love some of the ways that you guys had emphasized that, like staying ahead of the curve and staying ahead of the market instead of actually, chasing the market. We'd been telling that, just not as directly, and pretty good stuff.
Awesome.
I appreciate being on here. Thank you so much. Okay.
We've only got a couple of minutes, Jeff. One thing that I will, from my perspective, just close on, Jeff, and then you can close out with what you want to. But first and foremost, I don't feel like, and I think we have said this today, that we're going to be anything like 2008. But things are going to tighten up a little bit. The market, we are seeing obviously this shift. And, what I would say to you as the realtor, other than being educated and masterminding like we're doing here today, is to just have your own self prepared in your home financially, the best you can. And so, maybe just start tightening up on some things, right? Cost wise. If you don't have money set aside, I would set some money aside just so that as things do shift a little bit, you're prepared at home. I think a lot of times agents, we tend to, want to spend everything that we make. I think that's just human nature in general. So we want to just, spend everything we make either on fun stuff or back into our business. And it's important to pour back into our business, but it's also important to, have yourself set up financially, at home. So when shifts do happen and things do happen, we've been very blessed and spoiled in a lot of ways these last couple of years. Just set yourself up from a financial standpoint at home. And I would encourage, if anyone's not been doing that, to start doing that now, because again, I don't think it'll be like 2008, but we don't know, but if you're used to selling, 20 million in homes, and you go down to, somebody goes down to 12 million, that's still a lot of real estate. But if we are budgeting and living off $20 million, obviously that makes a shift in our income. So just food for thought. You know, I think a lot of agents back in '08, when it did get bad, people weren't prepared. And so, you know, people lost how agents lost houses. They had to short sell their own houses, on and on and on. So just encouragement on that.
Definitely. And guys, what I would wrap it up with, I think, you know, it's never the market. It's never the market. It's your ability or inability to convey the message of the market to the people. You know, that's what's going to work here. Again, educate yourself. You know, how can I convey that message, you know, of what's happening in the market? And that, so it can be such a great time. And I think, you know, mindset is huge. You know, if you go into this thinking, oh my God, this is just horrible, it's going to be hard, it's going to be challenging, it's going to be, you know, whatever, then that's going to be your reality.
It will.
You know, if you go into it and here's an opportunity to grow, I'm going to learn so much, this is going to be awesome, this is going to be a great market, I'm glad we're going into this, whatever, I'm going to come out of this on top, then that will be your reality. I really believe that. You will get what you think you're going to get.
Yeah.
Okay. So I would say just be working on yourself. I'm, you know, I don't know, you guys see this every week I'm in here, all these books. I'm reading all the time. And constantly working on this right here, working on the skills, studying this stuff, studying the 10-year treasury, studying these different things to be educated so that I can convey that message to our clients, our prospects, do the videos, get that stuff out, become the lighthouse in this market, you know, and you can come out way, way ahead.
And
you know,
partner with
here's
your
the thing, most people
lender.
aren't doing this stuff, guys. Most people aren't. I'm telling you, your competition's not doing this. A lot of them are just scroll through Facebook for 2 minutes. Everybody's in panic mode. Go ahead, Kathy. What were you going to say?
I was just going to say, partner with your lenders too. Like, what are some creative
Absolutely.
ways? Like, learn from your lenders, not just one lender, not your go-to, but what are some creative ways that, you know, we can start structuring deals, right? So start having those conversations with different lenders, because just like realtors, all lenders aren't created equal. So build some relationships, or the relationships you have with 2, 3, 4 different lenders. Start having these conversations, asking those questions. You know, hey, what are some creative ways that we can, you know, structure deals, right? Or for my seller, what are some things that we can do? You know, maybe instead of reducing the price, you know, can you, if we have in the comments that, hey, they're going to come to you, what can you do to help, you know, maybe buy down the rate, and have the lender contribute some of that. And then just like new construction people do, right? You know, with a preferred lender, you're going to get XYZ or this much towards closing costs. Start having some conversations with your lenders about doing some of that type of marketing on your properties.
I heard one lender here in town, and I forget who it is, but just this last week that I heard this, where they, you know, you can buy right now with them, and if the rates drop in the next 12 months, they will refi you at no cost to you. I'm like, okay, that's a great, there's a lender thinking out of the box and getting creative with this, whatever. And so you might start having some of those talks with your lenders. Hey, I heard about this. Is this something that we could figure out? How could you do this? You know, whatever. I mean, that's a good tool. Yeah. You know, here's these buyers that are waiting on the rates to drop or concerned about the rates, that kind of stuff. So anyway, lots of things to think about, guys. Hopefully this was just helpful to get you starting to think.
Yeah.
You know, I think we'll probably, I don't know, I'll talk to Kathy, Sean, you know, the leaders here in Freedom Team. You know, we might carry this on for the next couple, 2, 3 Tuesdays. In terms of just, here's what I would tell you. I know we had a lot of questions come in here. We weren't able to really get to those. A lot of you guys participated in answering those. We appreciate that down here in the chat. But be thinking about your questions, because what we might do is just come in here next week, do the same kind of thing, get more of the icon agents in here, big agents, and we'll all mastermind on this stuff together. Because again, together, you know, guys, we'll all get through this and we'll come out flying high on top. Okay. Yeah. That's what's going to happen here. So, you know, be ready for next Tuesday. We'll be back here. We'll probably carry on with, you know, part 2 of this is what I'm thinking. So, but we'll let you know what's up. But thank you very much. Again, if you're a guest with us, we appreciate you being on here. You're always welcome. Whatever we can do to add value to you and help you through this as well. Just know that we're here and you're not alone. So, Kathy, thank you very much. Yep. Everybody else, guys, thanks for participating. Have a great rest of your week. Thanks, Matt. Thanks, guys.
Everybody.
Okay. We'll see y'all. Have a good day.
Bye.
Bye-bye.